Hey everyone, how's it going? It's Russell here, and one of the biggest issues that Canadians are facing right now are the absolutely skyrocketing real estate prices that we've seen over the past 2 years, and things are really starting to get to a boiling point with some of the heads of Canada's biggest banks calling out the Bank of Canada, saying that they're being misleading and not entirely truthful about what's really going on here. Now, at the exact same time, we have the head of OSFI, one of the biggest bank regulators, saying that, hey, we're expecting to see a 10 to 20% crash in real estate prices very soon. So in today's video, we'll take a look at what these accusations are and why they should matter to you, and we'll listen in on that prediction of a 10 to 20% market crash from the head of OSFI, the Office for the Superintendent of Financial Institutions, and then at the end we'll talk a little bit about how likely a crash like this actually is to happen. But before we get into it, in my eyes, one of the only ways to get to a place where you can purchase a house is by investing your money as you're saving for that down payment, and if you'd like to do that, you can check out the links in the description. You can get $50 for free when you sign up for a Wealthsimple trade account, or $25 free when you purchase your first cryptocurrency down there in the description, and it helps support the channel as well. All right, let's listen in on this and see what's actually going on here and what these accusations are about. To best understand this, we need to set the stage a little bit. In a second, we're going to hear from Tiff Macklem, who is the governor of the Bank of Canada, the person that holds these press conferences saying, hey, here's what the Bank of Canada is doing. Now, one of the main things that the Bank of Canada and Tiff Macklem do is set interest rates. They'll control what the interest rate is based on whatever they want to happen in the economy. Now, some people say that at the beginning of the pandemic, their QE, or quantitative easing program, where they essentially add a whole bunch of new money to the system, while it may have been necessary to prop up the economy, some people are accusing them of this being the main reason that housing prices are absolutely ballooning. And this is something that was actually asked of him in a recent press conference only a couple days ago. He's asked straight up, do you see a market crash coming in these real estate conditions? Let's listen in.
Do you expect a drop in home prices or a housing market crash, perhaps?
Housing market activity is very elevated. We've seen very strong demand for housing, and housing prices have been moving up. Yesterday, we raised interest rates. We've signaled very clearly to Canadians that interest rates will be on a rising path, and those higher rates we do expect will begin to moderate growth in the housing sector. That's a good thing. We can't sustain the kind of growth we're seeing in the housing sector. We need to moderate spending growth overall in the economy so it doesn't run ahead of the supply capacity of the Canadian economy, so we don't create a new source of domestic inflation in this economy.
So here Tiff Macklem saying, hey, we've made it clear that we're going to be raising rates over the next while. And they think that likely those interest rate changes will affect the real estate market. By raising interest rates, you allow for people to not afford as large of a mortgage. And as a result, the amount of house that someone can afford goes down, and we see less demand. When we have low interest rates, higher demand for purchasing real estate, high interest rates, a lower demand. But what he doesn't point out here is the connection between Bank of Canada's actions at the beginning of the pandemic and the surging real estate prices, essentially not taking any sort of a blame for the situation that we find ourselves in. And this is where the accusations start to be thrown. In this article, the macro economy strategist for BMO, the Bank of Montreal here in Canada, Benjamin Reitz, says that it's hard to believe that housing and goods demand hasn't been juiced by policy rates sitting at the lower bound, essentially him saying the Bank of Canada lowering rates to the lowest that they ever have been. And he makes the point that many Canadians have shifted from doing fixed rate mortgages where your mortgage rate stays the same for the 5-year period, if you're on a 5-year period for your mortgage, and have instead shifted to more variable rate mortgages where people can borrow this money for even cheaper. And this has been something that's been sort of growing throughout the pandemic. But one interesting point that they make in this article is that BMO, the very same bank that we've got this analyst saying these claims that the Bank of Canada isn't being entirely truthful with the cause of this growth of real estate prices, well, they say that based on their calculations in October, over the year, these low interest rates have resulted in $150 billion worth of excess home demand. So if interest rates weren't as low as they were due to the decisions of the Bank of Canada, $150 billion over the past year would have been sort of extracted from the real estate market. That's the amount that went in because of these lower rates and the increased demand as a result of them. And Reitz emphasizes here, simply interest rates are a big determinant of demand no matter what the Bank of Canada Canada would have you believe. So he's emphasizing here that the Bank of Canada is saying, no, it's not what we've done that's increasing demand. We just have people who want more house because they're inside due to the pandemic, and there's more building costs. It's not an issue that we've created. It's one that would have been here anyways, even if we didn't print all this money and keep interest rates super low. Some banks are also saying that the Bank of Canada is discrediting its own inflation research, and they point out that a CEO advocated for an interest rate hike, and that's a big deal because CEOs want low interest rates because it encourages more spending, better business for them individually. So this is sort of all pointing to the fact that people are starting to lose confidence with the Bank of Canada, and this isn't only from these sort of heads of these big banks. It's also coming from the Canadian government itself and the politicians that are trying to manage all of this. And we'll get to these politicians' comments in just a second, but even more pressing is the comment from the head of OSFI, that's the Office for the Superintendent of Financial Institutions, essentially the regulator of all of the big banks in Canada. And let me show you this headline. I was rather surprised when I saw it, and I'll slide myself down here so you can read it. But they say home prices could slump 20% in some markets, and that's a warning from the OSFI chief.
Looking ahead, it feels like we're at the latter stages of that phase, and my expectation is that as rates go up, assuming they do, some of that fever is going to abate a little, and you'll see a slowdown in prices. In some markets where you had a really rapid increase in prices, you could see a fall of 10, 20% even. But that'll just be a return back to I wouldn't say norms, but a return back to a little bit more sanity after a sudden buildup in prices. And by the way, we went through that in Vancouver in 2015, 2016, and in Toronto in 2016, 27. And you're talking peak to trough declines of 10 to 20%. So we can absorb that volatility.
So it looks like OSFI is starting to realize and connect the dots here that the low for long interest rates that we've had over the past number of years from the Bank of Canada has put us in a situation where we could see this 10 to 20% real estate price dip. Now, this is especially interesting because despite these interest rate rises that are coming from the Bank of Canada, the Canadian government's recent Finance Committee hearing with the governor of the Bank of Canada, Tiff Macklem, the same guy we heard from, well, politicians pressed the governor of this Bank of Canada, claiming that he was being misleading, and much like the BMO accusations regarding their actions and how much of a cause they actually were to this rise in real estate prices we've seen here.
Speak to the bank's own understanding of the role of quantitative easing in the housing market over the last 2 years, and the extent to which it may have contributed to increases in the price of housing overall.
The reason we've seen strong mortgage growth in Canada is that Canadians want more housing and there's limited supply. And banks are very happy to make loans to credit-worthy Canadians. And when people want more mortgages, banks make those loans. There's no direct link between quantitative easing and the number of mortgage loans. What determines mortgage loans is how many houses people want to buy and what the cost of those houses are. Banks, as I said, are happy to provide those loans. They are subject to capital requirements, leverage requirements, liquidity requirements, and subject to those requirements, they can expand to provide those loans. There are a number of reasons why Canadians have wanted more houses during this pandemic. And the probably the biggest reason is the obvious one that we've all been spending a lot more time at home. Many of us have been working at home. Our children have been studying at home. Recreation is at home. People wanted more space. That increased the demand for houses. Monetary policy has also contributed to that increased demand in housing by lowering our policy rate to the effective lower bound, by using exceptional forward guidance and indicating to Canadians they could expect interest rates to remain low for a considerable period, and by supplementing that with quantitative easing. That all had the effect of lowering interest rates. And so, that definitely includes, it lowered mortgage rates. And when you lower mortgage rates, that encourages people to buy houses.
So we have some progress here from Tiff Macklem, the governor of the Bank of Canada, whereas previously at his press conferences, he wasn't saying that the interest rate decisions from the Bank of Canada were affecting these real estate prices. Here he makes the admission that, hey, using quantitative easing and lowering real estate interest rates, well, yeah, maybe we had an effect on real estate prices, propping them up, allowing for more people to borrow more with less to qualify for it. But there is one thing that's a little bit misleading in here that I want to point out. He says that there's no direct connection between the amount of mortgages banks are able to give out and the Bank of Canada's money printing quantitative easing program. Now, I would say that this isn't entirely true. We won't get into all of the specifics about how QE works, but essentially the Bank of Canada can pay these big banks with something called settlement balances that they just create out of thin air. Now, because these big banks now have these settlement balances, they have larger capital reserves, meaning that the capital reserve requirements, the amount of money a bank has to have in order to lend out a certain amount of money, well, that pool is larger, and as a result, they're able to lend out more. So I would say it's a little bit misleading and deceitful that the Bank of Canada is saying, okay, well, our decisions and our quantitative easing program doesn't impact the Bank of Canada's ability or these individual banks' ability to let out these mortgages. Man, I'm getting a phone call in the middle of recording. But in this very same finance committee meeting where the governor of the Bank of Canada is questioned, while politicians ask him, well, how could this have happened? How could there be a 40% increase year over year of real estate prices? And well, Tiff Macklem responds in a rather solemn way.
But I'm trying to get an understanding of how you can have 43% increase in just a 2-year period.
Housing prices have gone up a lot. The housing market is very elevated. And we cannot continue to see the kind of increases in housing prices or the kind of growth rate we've seen in housing. I just want to be very clear on that right off the top. Why have housing prices gone up so much? Look, it's a combination of there's been a lot of demand for housing and there's been limited supply. I know a number of witnesses, the fundamental solution to reducing house price increases is to increase the supply of housing in this country. That's what's actually going to get people into the houses they want.
With all due respect, is that I'm asking you about the last 2 years. Has quantitative easing affected interest rates and added fuel to the fire when it comes to our housing costs?
Quantitative easing, together with the other measures we took, did lower mortgage rates, and that contributed to the strength of the housing market.
Okay.
I think that's a fair assessment from Tiff Macklem, saying that supply is the best way out of this issue, but I do believe that he is still underselling the amount that the Bank of Canada's decisions had an impact on the demand side for these real estate prices. Now, it's also interesting to consider that the Bank of Canada right now, housing isn't in their mandate. They recently had a mandate review where the finance minister from the current government, that's Chrystia Freeland, and the Bank of Canada governor, Tiff Macklem, sort of get together and their organizations talk about what should really the Bank of Canada's job be. Now, they sort of set it to be the same, keep inflation at target and support like a strong Canadian financial system. But some other countries have actually added things to this mandate, like optimizing for maximum employment, as well as optimizing for making sure that house prices are sustainable. Interestingly, the Bank of Canada and the finance department didn't decide to add these to the mandate, so it's actually not based on their mandate, the Bank of Canada's job to think about housing prices when they make decisions that are supporting their other mandate goals. Now, do I personally, like the chief of OSFI, think that we could see a 10 to 20% dip in real estate prices over the next year? Well, it's tough to tell, but we can look at two main things that I think could actually potentially change that could dramatically affect this. Now, the first one is interest rates, and the second one is supply, right? If we have higher interest rates, we could see lower demand, and as a result, lowering prices. And the same if we have a huge increase of supply, well, then we could also see lowering cost of real estate as the demand is spread out over a larger supply. Now, starting with the supply increase, I don't personally think that this is likely to happen. Now, the first reason is that housing is a municipal and provincial issue, not a federal issue. And when you get down to those municipal levels of government, you have a lot of NIMBYism, or not in my backyardism, where folks who say, oh, I want lower real estate prices for everyone, well, as soon as there's like a high density development in their neighborhood, condos are built, row houses, townhomes, they start to say, okay, actually, I don't want to see this in my city. I just meant in other cities. We have this NIMBYism, and I think there'll be a lot of pushback on the local level against any sort of housing upstarts. Now, additionally, on the federal level, if they were to fund more housing construction, well, yeah, that could potentially be a good thing, but depending on the way they do it, opponents could frame this funding as just a handout for people who are already rich in these big companies that are doing these real estate developments, unless they go the route of making more co-op homes or sort of more joint ownership homes that aren't exactly built on profit for the people who are building them, well, then maybe there could be an angle there. But I think that it'll be a political issue if you want to give more funding for more houses to be built. However, on the interest rate side, this is something that could change that I think could actually result in a slowdown in housing prices or even a decline. Large interest rate rises could have this impact. Now, the Bank of Canada has said that over the next year, well, it is likely that they're going to be raising each quarter a quarter percentage. So over the course of a full year, raising interest rates by 1%. Now, if they stay to this course, I don't think we're going to see a large impact on housing prices because they've sort of projected this forward and everyone kind of knows that this is what's going to happen. Now, on the flip side, if we see inflation spike even more dramatically, maybe brought on by the situation in Ukraine right now or a number of other different reasons, well, the Bank of Canada could be shocked by a huge spike in inflation and say, oh crap, we need to act on this more quickly, and instead of raising it by a quarter percentage point, maybe raise it by half a point or 75% of a point, right? 0.75. Now, this kind of interest rate rise could see a dramatic change in real estate prices as both people who have variable rate mortgages have to pay more on their mortgages, while additionally there's less demand in the market, people needing to sell, less people able to buy. You can sort of see how this could have a cascading effect. So what I'm most going to be looking at is the inflation numbers coming in and the interest rate response from the Bank of Canada moving forward. But that about sums it up for what I'm covering on this video. A lot of interesting things in here, a lot of different takes from different governments or the Bank of Canada, OSFI, different politicians, but I'm curious to know what you think about it all. It's definitely a complex situation and I want to hear from you down in the comments. Let me know what you think. And while you're down there, again, if you're interested in buying things like Bitcoin or Ethereum, you can use the links down there. Or if you want to open up your first ever investment account with Wealthsimple, you can get $50 for free when you fund your account with $150 using the link in the description. And when you use those links, you support more Canadian content being made on the YouTube platform just like this. But with all of that said, thanks so much for watching, everybody. I really hope this video helped you out at least a little bit, and I'll see you next time.